Hi, this is Robert with Blockchain Education, and today we're going to talk about Fibonacci retracement and how to understand Fibonacci and how to add the Fibonacci retracement tool to Binance. Now, first of all, when you think of popular cryptocurrency trading tools, the Fibonacci retracement tool is a thing that's right up there at the top of the list. It helps traders every day reveal key levels to place buy and sell orders in a very simple way to explain the purpose of this highly effective tool. And it doesn't do it entirely justice. For those traders who properly know how to utilize the ability of Fibonacci to spot these really crucial levels of support and resistance, it can and will make you into a really good trader. It can take your trading to a whole new level. A lot of people think that there was someone named Fibonacci, but actually his name was Leonardo Bonacci, and Fibonacci means the son of Bonacci. So it's kind of a nickname and it stuck. He was also called Leonardo Pisano, which means Leonardo of Pisa. He was an Italian mathematician born into a humble family of traders back in about the year 1170. Bonacci was so brilliant that his mathematical teachings can be felt even today, more than 800 years later. However, this was not the first time these sequences of numbers were recorded. So Fibonacci sequences have been in nature since the beginning of time, and historians had discovered documents by mathematicians in India that were found to date at least 600 years earlier than Fibonacci made them popular. In fact, it's very possible that Fibonacci found the earlier calculations while traveling in India, took them back to Europe, and made them popular. Now, why are Fibonacci levels such a big deal in trading? Well, it's interesting that Fibonacci sequence is found in the geometry of nature. You can find it in many things, from fingerprints to DNA strands to the spinning of a galaxy to certain key numbers that have deep meaning. The number sequence produces a ratio of 61.8, and we refer to that as the golden ratio, which can be found in many aspects of nature. When asked to choose between two value-neutral options, study after study has shown that this ratio is typically split between 62% and 38%, not 50-50. The 62% is labeled as the golden ratio, which is found within our financial markets as well. And most financial markets will show that this golden ratio on both time and price periods in which a retracement of 61.8% is typically found after a 100% advancement. So first you have advancement, then you have retracement. It's just a normal up and down cycle of coins and stocks and everything. To sum it all up, Fibonacci retracement levels refer to these simple areas of support and resistance that are typically found in human behavior and over a decade's worth of financial studies. Now, the Fibonacci levels are used within institutional trading. They are 23.6%, 38.2%, 50%, 61.8%, and 100%. However, the Fibonacci levels more commonly used in cryptocurrency trading are 38.2, 50%, 61.8, and 100%. The 100% level is not a Fibonacci level per se, but it stems from Dow's theory that averages will often retrace to half of their prior movement. Nonetheless, these are levels that you'll find the most support and resistance at or around, or very close to. But why are these levels so important? Well, they're psychological barriers that tend to repeatedly show up within the financial markets time and time again. They're called inflection points, where traders tend to anticipate a bounce or a break off resistance or support. Now, another interesting aspect of Fibonacci levels is the fact that the more people that use them, the more accurate they become. I've talked about this a lot in the past within the group that I help mediate, and it basically boils down to the fact that when something is very, very noticeable and very predictable, it's because a lot of traders know about it. Now, Fibonacci goes a little bit beyond that because it's something almost magical or mystical, but it's true that a lot of traders know about the Fibonacci levels. Now, the most important Fibonacci level, as you might have already guessed, is the 0.618, the golden mean level. This is a crucial level where sellers tend to give up bargain hunting and a potential mass buying frenzy will usually ensue. These are great places to either buy up on a breakout or a pullback in order to confirm their speculation. It's a safe move since Fibonacci levels are not always precise. Now, how do you use this almost magical tool? Well, the Fibonacci retracement levels are made up of horizontal lines which are used to highlight areas of expected support and resistance within the crucial Fibonacci ratios. Now, in order to create these levels, you'll need to draw a trend line between the lowest and the highest price of any particular trading cycle. Call it magic, or simply just some form of a self-fulfilling prophecy, but for some unknown reason, markets tend to move significantly towards these support and resistance levels. One important thing you should also note, Fibonacci levels are not completely accurate. They're close, but you got to use your common sense along with other indicators and trading patterns in order to solidify a really winning trading strategy. What I do personally is I use indicators in combination, and they basically fortify each other, or you can build upon how solid an indicator's levels are by using one or two other indicators along with it. I've talked about that a lot in the past. Now, one thing to remember is that if you take these levels into consideration, you'll have a much higher probability of winning trades. Now, as far as using them with other trading tools, it's highly recommended that you utilize the RSI and the MACD and a few other indicators that you might like alongside the Fibonacci retracement tool. And you'll find that other tools and indicators tend to overlap with the results of the Fibonacci retracement levels. So this generally means that there is a fortified support and resistance to be expected. Now, Fibonacci levels are very good at predicting a bounce off a big red candle on completion of a quick rally. Now, these quick trades can generate 20 to 40% profit if timed properly, sometimes a lot more, because crypto is very volatile, as you know. Now, this takes into consideration that once a rally has been quickly dumped, it will typically bounce back at a Fibonacci level near or around 0.618 or 0.786 before continuing to reach new lows. Many traders, including myself, will use the Fibonacci retracement levels to decide where to buy in the next trading cycle. Now remember that these levels are merely points of interest, and prices will not always reach one level or another, but oftentimes they'll stay around the same ballpark area. Now indicators like the volume and momentum are extremely important to monitor, and in order to confirm the Fibonacci levels, you got to use these other indicators. It's also worth noting that high volume markets are more likely to show retracement levels than low volume. Larger volume cryptocurrencies like Bitcoin, Ethereum, Litecoin, and other cryptocurrencies, Bitcoin Cash, Link, ones in the top 10 are more likely to show retracement levels than minor tokens. Now, I'm going to show you how to create a Fibonacci chart overlay on TradingView. This is going to help you take your trading to the next level as you begin to use it and become familiar with it. So I've picked out link versus US dollar tether on the 4-hour, and what you do is you go over to the third one down from the left. It says GAN and Fibonacci tools. Click on that. Go down to Fib Retracement. Now it's ready to go. I start by clicking up above resistance. Click once below it. Drag the top one down over the bottom, down to resistance, which is here. Drag that over, and drag this over to the current time frame. So now you have an adjustment where you can fill up the entire screen with your Fib Retracement tool, and you're set to go. Notice this is very interesting. You have a really strong bounce at the 0.786. This is not by accident, folks. This is because people know how to use this. It's a bit of adjustment here, and we're still just above the 786. So that's it about the Fibonacci tool, and stay tuned for the next video, which is going to be titled The Beginner's Guide to Binance Futures. Have a good night.